Let's complete the share exchange. The share exchange. So shares acquired by ICAN. So that's what 76,800. Then shares
78,000.
78, Abi. Is it 78? Then shares issued by ICAN, Abi. By ICAN to lower will be 2/3, Abi, multiplied by what? 76,800,000 shares. Abi. So what's that? What's the value?
51,200.
51,200 shares. 200,000 shares. This is what we issued. This is what I issued. Is that not? Now let's go to the next line. Value. How do you know the value of this? Remember that ICAN is giving out these shares to lower. Abi? Okay. This is the exchange. ICAN, received this, acquired this from lower. This is the acquired shares. So how did we get these issued shares? They told us that they should issue, the share exchange is what? 2 for 3. That is, for every 3 of these, lower, ICAN is giving what? 2. For every 3 of these, we are giving out what? 2. So by the time we do the computation, we arrive at what? 51,200,000 shares. So the next stage is what? The value. Let's calculate the value of shares issued. Shares issued. So that will give us what?
26. 300.
That will be what? 51,200 multiplied by what? The market price of, is it parent or subsidiary? Market price of what? ICAN now. Because ICAN is the one giving out what? Is the one giving out the shares. So use the market price. And what's the market price? Is the market price the same thing as the nominal price? What's the market price? 6 naira. So the 6 naira is higher than the nominal. Don't forget that the nominal price is what? Is 1 naira. Abi? So it is the market price. We use market price to value the shares. Abi? So this valuation now is what? Is higher than what do you call it? Than the nominal. So the difference between these is what we call what? The difference between these is what? The premium. So the premium here is what? 5 naira. Do you understand now? The premium there is what? Okay, let me. That's a question. Okay, now this is the number of shares issued by ICAN to lower. This is the number of shares. So how do we now record this in the consolidated statement of financial position? How do we record this? We can't record this. We need to record the value. So what will now be the value? We will not value it at this nominal price. We will value it at this what? Market price. And they gave us the market price to be 6 naira. Is it not 6 naira? So 6 naira. When you multiply this by this, what do we have?
307.
So the value is going to be what?
307.
The value is going to be 307
200,000.
200,000 naira. Now, this is now the value, 307, 200,000 represents the value of shares issued. Meaning that this particular, when you go to the consolidated statement of financial position, our new share capital is now what? 307. Remember, the existing is what? 320. Abi? So now, how do we now bring this in? How do we bring this into that share capital? It will be wrong when you add this to the share capital. It will be wrong when you add it. So what you will now do is that this particular value represents two things. Remember that the way we arrive at it, we have said the number of shares multiplied by 6 naira, right? Yes. So it will be wrong when we consolidate the whole of this into the share capital. So it will be wrong. So what you now do is that break it down. 200,000 shares. Multiplied by what? Multiplied by 1 naira. What do we have? 51,000 shares. 51,000 what? Naira. So this 51,000 naira, add it to this share capital. Take this 51,200 naira, add it to the share capital. Let it represent what? The new what? The new share capital, which is what? 51,200,000. Now, remember that it is not complete, Abi. It's not complete. So we now look at the other leg, which is same shares, 51,200,000 shares. Multiplied by what? 5 naira. Because the nominal price is what? The nominal price is 1 naira. Do you understand now? But the market price is 6 naira. So 6 naira is higher now, higher than 1 naira now. So what's the difference between 6 naira and 1 naira? 5 naira. That 5 naira is the nominal. The premium element. So 5 naira. So what do we have here? 2 what? 256,000 minus. Now this is the second leg. Now this one will be recognized in your share premium. You treat this particular amount as what? The premium. Don't add premium to equity share capital. It is wrong. Do you get? So take the one that relates to is like a gain. It's like profit. Don't add profit to your share capital. So separate it. So we are bringing this to the share premium. So what do we have here? 256,000. 256,000. So when we add the two together, add this and this together, what do we have?
307.
We have 307. When we add this and this together, we have 307. Do you get? So I told you, I said it would be wrong when you consolidate the whole of 307 into the equity component. It is wrong. It is wrong. So split it. Remove the element of the nominal value, then premium value. This is the nominal value. This is what? The premium value. So anytime you are giving share exchange, always look for the what? The premium element. Then look for what? The nominal element. So you can see why presentation is good. From this your solution, you have been able to what? To post to the necessary line item. Any question? The market price, 10 naira. Yes, if the market price is 10 naira, the nominal price. Nominal price is usually between 1 naira, 50 kobo, 20 kobo, 30 kobo. Do you get it? Any question? You are done with this. Any question? Any question? So let's move to what? Let's move to working what? Working two. Working two. Joseph. Yeah, let's move to working two. So note 2 now. Note 2. So no two. Let's compute the goodwill. Let's compute the goodwill. Let's compute the goodwill. Huh? You said what? It's almost done. It's good. Good is last night. We didn't even go far like this. So I think I called him that took a day with it. I saw those videos. So I'm glad that you guys are so good. I'm glad. Shall we? Note 2. Note 2. Note 2. Note 2. Note 2. Let's compute the goodwill. The formula in computing goodwill will be goodwill equals what? Purchase consideration plus what? NCI minus what? Net assets. So we are giving the purchase consideration to be share exchange, Abi. Then NCI is also given. How is NCI measured? How is NCI measured? Additional information what? Huh? Additional information what? Is there additional information? Additional information 5. So it's at fair value. So we'll come back to that. The net assets need to be computed, Abi. So let's compute this first. Let's compute this. Computation of net assets. Net asset of lower. 3 columns. We have 3 columns, right? So we have the reporting of consolidation date of consolidation, date of acquisition, then what? Post-acquisition profit. Have it? 3 zeros. So we are using the equity component of what? Of the subsidiary. Equity component of the subsidiary. So let's go to the equity component. We have the share capital B, equity share, right? What's the value of that? 120. For subsidiary, lower. Huh? 120,000. We still repeat it in the same in the date of acquisition. No difference. Next. What's the next? Retained earnings. Retained earnings at consolidation date. Are we giving? That's the one that's reporting date. You don't call it consolidation, they call it what? Reporting date. So check the SFP. The SFP of the lower. 2.8. Then the one at acquisition date, are we giving the additional information? Not giving. So question mark. So what do we do now? Where you are not giving, what do we call it? The retained earnings at acquisition date. So I told you that you should consider 2 things. So the first thing there, you have to consider number 1 is what? Are we giving retained earnings at what? At consolidation date. Then are we giving profit for the period, for the year? That's for the subsidiary, which is a lower. So that we can use this diagram. So retained earnings at what? At reporting date, at date of consultation. What's the value? 208. Abi? Now, this is the end of the accounting year. At the end of the accounting year is what? September now. Yes. September 2017. So if you now count backward, it's going to the accounting year will start from when? From October now. October 1st first, 2000 and what? 2016. Backward now, 2016. From 2016, so count. October 2016, we are November, December, how many months? December 2016, that's 3 months. Then we move to the next year, the following year, which is January. January 1st, 2017. So count January to September. 9 months. It's complete now, 12 months now. Is it not? So now, but did the IIA acquire lower on first of on this date? No now. When did they acquire?
April.
So April, abi? So remember, let's assume that the whole of this represents what? The whole of this line represents how many months? 12, abi? From year to year is 12. Is that not? But the parent company didn't acquire yet. They acquired mid-year, abi? So break it down. This is mid, abi? This is mid. So this date will be what? What date is this? 1st of April 2017. Now the whole of the profit for the year. What's the whole of the profit for the year? The whole of the profit from year to year is what? 96. So 96,000. That's the whole of the profit. So if you divide the profit 96,000 into 2, we have what? 48 year. Abi? And 48 what? Year. Is that not? So we have divided the profit into 2. 48 for this 6 month profit, 6 month profit. Now let's keep this. Let's leave this now. Let us leave this now. Let's leave this 48 and 48. Now let's get the retained earning at this date as at the beginning of the year. We want to get the retained earning. This retained earning. Retained earning is different from profit. Retained earning is the accumulated profit. So what will be the retained earning as at 2016? Giving retained earning at reporting date to be 208 and profit for that year to be 96. Take note, 96 is embedded here. 96 is included in this 28. Abi? So what will be the retained earning? What? Yes, minus this from this. What do you have? Remember that this is profit, not loss. So if it is profit, you minus from here. If it is loss, you add. Abi? But this one is positive, loss. We are minus from this. What do you have? 1,2,000. So retained earning as at 1st of October 2016 stood at what? 112. Is that not? The parent, the subsidiary made profit of 96. So when you add 96 to this, it will give us what? 208. So this particular retained earning is retained earning at what? Consolidation or reporting. This retained earning here represent what? Not acquisition, they not retained earning at acquisition because they did not acquire here. Acquisition was done here. So we cannot say that this 112 is retained earning at what? It's wrong. It's retained earning at the beginning of the year. So if I want to know the retained earning at acquisition date, this date of acquisition, this date of acquisition. So what will I do? Remember that the half of this is 48, abi? Half of this is 48. So, and I need the retained earning here. What will be the retained earning here? What will be the retained earning here? It will be 112 plus what? Plus 48. Plus 48. So it's going to give us what? 160. This is what retained earnings at what? At acquisition date. That's retained earnings at acquisition. Question. 208 is the retained earning at reporting date. Retained earning at reporting date.
So even if we remove the 48 to give us 160.
Yes. Even if you remove 48 from here, you still get this. If you add 112 to this, you still get this. You can say 48 minus this, you get it. Or you say 112 plus 48, you get it. Any question on this now? So we have gotten. Okay. Now I told you that gain retained earnings at acquisition date is not good. What do you do? Look for two things. What are those two things? Profit for the year and retained earnings. retaining as reporting date is given. Do you get? Then look at what's it called? Profit for the year. That profit is for 12 months. If you minus 96, 208 minus 96 is going to give you 112. But 112 represents retaining at the beginning of the year. If acquisition was done on 1st of October 2016, then that 112 would have represented the retaining and acquisition.
Let's say we are not
Why don't you let's use the sequence we are using for that statement of content? That you just use 6 over 12 and 6,000. That is not
consolidation 2,000.
6 over 12 times 96. It should be
That's your own, if you
That one would be clearer.
When we are not going
So if you use that one, it should be clearer. And people are used to
that's
it.
so we are not going to the total so not 96,000.
no, 208 minus.
And then 96,000.
Yes, it will give you 112. But because we are looking at retaining at acquisition date, and acquisition date is the cost of it.
I'm just saying, so 8 minus 6.
Okay, your own method is.
No, that this one is if you just use that sequence, you are using 6 over 12.
And like 6 over 12 divided by.
So they have the.
Oh, yeah, wait, they said.
So that is half.
Just like 6 over 12.